Good morning, everybody. This is Johnny Seville from Acorn Wealth Corp. And as we get ready for another day in the market, let's have a look at what's been happening. Of course, that drop really did continue. I hope you all got a chance to listen to yesterday's summary. Of course, we warned, look, any kind of bounce. Certainly wouldn't be buying into it. In fact, this would be an opportunity to sell any weak stocks or any stocks really at all that you're in long. I continue to sell off. Obviously, I've been selling off my long positions all through last week, and I continued to do that yesterday morning as the market was rallying early. I do hold a couple of longs still, which I always think is good to hold the strong longs as a hedge, but obviously the shorts have really had their way. S&P 500 yesterday had one of its largest drops in history, certainly the worst week since 2011. And as you can see, this has been a huge drop. The overseas markets have been plummeting as well. And if you actually have a look at the futures on the S&P 500, while everyone may have been sleeping, or perhaps in my webinar last night, the S&P 500 futures, which you can see were again coming in at 26.45 into the close of yesterday. From 26.45, the S&P 500 futures then crashed all the way down to into this 25.30 area. So you're talking about another 100 plus points drop in the overnight futures. This is we had the short covering rally then, and we're currently, as we're heading towards the open, we pulled back once again to lower than where we closed yesterday. So this is these are the very strong headwinds we go into today. Now, if you just want to get an idea of where that would be in reflection to the chart, that basically means the S&P 500, if I can just take these lines off for a moment, the S&P 500 dropped again roughly another 100 points. So the S&P 500 has gone from all the way up here, including the overnight futures, has dropped all the way down, to the 200-day moving average. The S&P 500, last time it tested the 200-day moving average was in November of 2016. We bounced from there. We tested it previously in June of 2016. We bounced there. But then we go back a little bit further, and then we go back into some of these previous nasty drops. And I've been talking about 2015 quite a fair bit recently. So if we go back and have a look at those examples, as you can see, this has happened before, and this is when we had touched the 200-day moving average, and when we haven't bounced, it resulted in a very, very sharp drop. Now the difference here is that the drop of that 10% came under the 200-day. We have been at such high levels that the drop now has been from above the 200-day, and we've dropped 10%. So, well, obviously, whether we actually hold here today or not is going to be very, very interesting. Again, you can see we had a drop here, kind of bounced off of that as well. So, if we get any kind of a bounce, we're now at the very last, we're now coming down towards that very last moving average, at least overnight, that could possibly save the S&P. But either way you look at it, it's very sharp, it's very dangerous, and it's certainly time to be very cautious. Obviously, the stocks that we talked about over these last week, I mean, I'd certainly recommend you take a look at the last few nights of executive summaries if you've missed any. But obviously TZA was one of the alerts we had suggested taking a look at on Thursday night's class. And we've had a great rally so far. It was up 5.7%, up another 11% yesterday. So up from, what was it, $11 down to $13.22. It did hit the first target criteria of $12.93. So if you took a little bit of profit off the table there, I'd be inclined to let this run. I mean, it could pull back and stop out if the market dramatically rallies from here. But I mean, at this point, it's looking unlikely. But I mean, again, if you take a little, even if you take a little bit of profit off the table, half or a third is the kind of strategy I follow. And I would consider updating the stop loss to 1187. So that and being able to let this one run. It's a good hedge on the market, and it gives you an overall a short position, of course, 3 times what the market drops by. So of course, the other one we talked about, VXX, on Thursday has had a fantastic rally. That's up almost 50%. Again, same strategy. I would certainly take some top profit off the table. Maybe take the original capital out. So then that way you're dealing with 100% profit. So now this could continue going significantly higher. The VXX could. So nothing wrong with holding on to some, but again, it's all about capital preservation. So at least a partial profit take would probably be a reasonable idea, considering we found this at $30. Throwing in a stop signal around 29.87 wouldn't be a bad way to go. Okay, so we'll run through these other ones. We've got CYH. CYH is on the long side, holding its moving average for now. Again, my strategy for the longs has been to just pretty much since last week on Tuesday, just start selling off positions in my longs across the board. It's no real although I didn't like the stocks, but just simply from reducing my exposure to the US stock market. CYH is one that has held up quite well. Obviously, it has been at some profit-taking targets up around $6. Hopefully, people have been taking a bit of profit, at least if you are holding it, so that your exposure isn't as great in terms of any stock, really. But if this one's going to bounce, it would bounce here. If it doesn't bounce off of this moving average, it's probably done. If you are continuing to hold any of that. CATM's also held up very, very well, obviously. The volume down has been weakening. It was up on 1.47 million on Thursday, down on 1.4, down yesterday on 1.2. Anything that's obviously dropping less than the market is going to be something that has got some resilience to it. So given the whole market was down 4%, and this only dropped 2.8 on weaker volume, then it's got a fighting chance. Obviously, this is from the Smart Money scan. So obviously, this is one I wouldn't be as concerned about, at least not for now. SFEG, which I still hold. I mean, gold has acted very well. Gold is up. I'm holding this one. It hasn't broken down. This is obviously a small speculative play. I hold a small position in this, and so for now, this is looking quite good. Okay. Moving on to the next one, we've got RGLS. RGLS also from the Smart Money long scan. This has also held up quite well. RGLS is bounced on Friday, was up 4.17%. It was on 542,000 shares. Yesterday in the market crash, we had it pulled back to that same support level but dropped only on 479,000 shares. So again, these are the ones that, as speculative longs, I would be happy to hold a small position in. But again, as more of a hedge, and the fact that they have held up well, it's still above its 200-day moving average. But like anything, I mean, these are the kinds of ones that might benefit from a bit of a bounce. And of course, the reason why these smaller stocks are the types of longs I like to hold isn't because I'm a penny stock trader. It's because these types of stocks don't follow the market. Stocks that are, have their own kind of story, which are what I would say as far as you can get for non-correlating assets to the S&P. They're not held in an index. They're not in the Russell, Russell 100 or the Dow 30 or the S&P 500. So they're not going to get affected so much from ETF buying and selling, balancing, mutual fund liquidations. These people who are in these kinds of stocks are, believers in the story. This stock has a great chance of being FDA approved. Therefore, I'm not selling a single share. We're looking for those cult following stocks. So things that are real companies, good volume with great patterns and insider buying. And so that's why I hold these stocks, and I can almost guarantee you that even though they're $1, $2, $3, they have a much higher probability of success than some of the large cap stocks that are going to be subject to a lot more manipulation, at least in my opinion. But it's not everyone's cup of tea, but these are the kinds of ones I do like to hold in markets like this, and have had good success with this type of strategy. So anyway, not saying go buy it. I'm just saying this one is obvious. That's why it may be holding up better than others. INFI. I sold a third of this. Now this is the same kind of thing, but this was struggling more than some of the other ones. So again, it hadn't really broken down yet. It's still above the support level of the moving average. Again, held up very well considering the market conditions. So I did sell a third. As I mentioned yesterday, if I saw any kind of rally yesterday, I was going to look at that as an opportunity to take some profits. So I did on INFI. I reduced my position by another third, and as you can see, with INFI, it is consolidating in a downward channel at the moment. But what I didn't like was the fact that there was also a potential for an upward rising head and shoulder there. So because there's a question mark, I mean, it might not be a head and shoulder, and that downward channel here on the right might work, but there's too many question marks. I mean, when you start to pull at straws like that and say, well, maybe this or maybe that, well, you obviously don't have a very clear idea of exactly what the pattern is. And if you're in a market where there's already too many question marks, the very last thing you want to be doing is holding onto a stock that you have any question marks about. If the pattern isn't clear, then you shouldn't be in the stock. And so for this one, that was a reason for me to immediately sell a third of this on the way up, and I put a tight stop loss in on this, so just underneath the low of yesterday. I think it was at 187. So I was happy to get out of a piece of my position close to where I got into it at, reduce my risk, and I'm only holding a small amount left anyway after my exits I've been taking on this one. XENE, much stronger in its pattern than the previous one, and so on XENE, I sold a portion of this just again to simply reduce exposure, and I've updated my stop loss to 283. Other things like AGLE, I mean, I've already sold this one. I already sold it right at the top as it rallied into resistance. I sold more on the way down, and I'm completely out of this one. And I took my money out of AGLE over these last few days and put it into GNMX because I mean, again, think trading is about taking your money and finding the path of least resistance to profit. Think about when a river runs down through a valley. When you've got all this massive water coming down through the valley, and it reaches a fork in that valley, right? And on the right-hand side of the fork, there's all these trees that have fallen over, massive rocks, boulders, and on the left, nothing. Which way does the water go? It flows to the path of least resistance, and that's what trading is all about. It's about saying, well, my money, I'm looking to put it day to day. It's all constantly trying to find the path of least resistance to make money. And so I looked at this as a river. AGLE, I still like it. There's still massive insider buying. It's still going to be, as you can see, it's still on my watch list, Acorn A list long, and maybe I'll get back into it. But when I looked at this over these last few days and said, right, is this chart better or is this chart better? The answer was very clear. And I was already long this one, so over these last few days, I sold AGLE, and took the money I took from AGLE and put it to use in the path of least resistance as a good long hedge. So anyway, that's just to give you a bit of an idea of how I'm trading this. So there's that one. ATNM also exited this yesterday into the rally, as I mentioned. Obviously, it had a rally, a nice rally up during the day. It was up at 68 cents or so, and so killed it, got out. Again, I'll keep an eye on it. It's got a lot of insider buying, but it's just not a high probability setup right now. On the short side, You've got ANDV. I mean, pretty much everything on the short side, of course, looks good. If you looked at the FinViz chart yesterday, yeah, that's the FinViz chart. So I mean, that's why I was happy with any of my longs that were actually going up because you know I think what something like 70 stocks. What was it again? Let me just have a quick look. Uh, yeah. So out of the Dow, 756 stocks went up, 6,209 went down. You know, so it's definitely been slim pickings. So but certainly the ones that we found have been excellent. ANDV, of course, hasn't just been going down for the last few days. It's been going down since January 23rd, and these are the kinds of stocks I love to find because they were already showing that they were the rotten apple in the tree. So ANDV looks great. Obviously, that's been declining. There's been a lot, obviously, that have done well. They're all in the newsletter, but HMN. Obviously, that continued declining. This was from the other day. ADSK, which was from yesterday morning's alerts, that continued down. I mean, it had a higher high and a lower low, but I mean, but at the end of the day, it just gave up all of its strength and closed right below the moving average, which is excellent. I mean, look, there's so many here. Um, and these are all ones, of course, that have come from the Smart Money Scan. FORM broke down below its its resist support, excuse me, and continued down. CAA, which is from the alerts a few days ago, this has continued down. All of these still look good. LEG at support now. I mean, if this can break $43. This could be a secondary entry point. If it can break below, say, 42.83, then that should be able to start breaking down to its more exciting target of 29.35. NTAP, excellent. USFD. I mean, all of these from the recent alerts have just been fantastic. So a couple of ones, if you're looking for new setups, obviously we're going to be doing our smart money scanning class tonight. So there are a lot of stocks that haven't broken down yet that are still waiting to break support. That's the beauty about the market, is not everything crashes all at once. But if we have a look here at CMCO, this is one that looks decent. And this has just broken yesterday, so this one could be a possible drop to 33.13. Look at a stop signal of 39.67. There is insider selling on this. IRWD, Ironwood Pharmaceuticals. Excuse the mess. I'll take the moving averages off for a second. You've got a possible head and shoulder here, downward neckline. Okay, that's pattern 1. And then within that, you have a second pattern, which is pattern 2, right? So if you go back a little bit, so you got upward channel, a large-scale head and shoulder, turned into a smaller head and shoulder, and so that one could be a decent drop. So I mean, even just based on the smaller head and shoulder, you're looking at a drop down towards $10. So if it breaks below 13.07, I'd be looking for a short down to 10.23, and you could look at a stop signal of 14.13. And to give you an idea, if you were to, because it is a pharmaceutical, maybe prefer the options. I mean, you could be looking at, for example, the May options. What have we also got? We've got March. Yeah, March might be bit soon, but if you looked at May, for example, the May $15 puts $1.50, 1750s have a lot more open interest. Those are 288. Or if you just wanted to go speculative route, again, a good open interest on the 1250 puts. 1250 puts last traded for 90 cents. So that's probably what I would be looking at. I'm looking at the May 1250 puts. Now, they may open higher than that, but do remember that option trading is very risky. It's the easiest way to lose all your money if you don't know what you're doing. So with an option like this, I only invest what I'm willing to lose. So IRWD and MYOK, another good one. This one's got very big selling, very big dollar amounts of selling. It's just appears to be rolling over here at the top at the moment. And this was from our again from the Smart Money scan. There's our here we go. So rallied up, seem to be breaking down at the moment. I do want to see it break a new low, so it would be ideal. But this does look decent, closing the bottom half of the range. And let's just have a quick look and see if we've got any kind of a channel here. Yeah, you see, that's that kind of oscillation does concern me a little bit. But it has crossed below both these moving averages. So you could give it a shot there, but I mean, I would be looking at a stop signal of, say, 55.53. Or even 54.61. Just to protect, give it a bit of a tighter area, and look at that as a momentum setup. So well, that's probably enough for now. Obviously, we're going to have class tonight, and if there's anything extra special I see today, I'll let you know. But otherwise, those of you joining us for the Smart Money course, we'll see you this evening at 8:10 p.m. Eastern. Of course, we have trading room prior to that at 7 p.m. Eastern. So looking forward to seeing you all, and have a wonderful day. Look after yourself.